talked about the potential in the battery day.
When Tesla holds its battery day on September 22nd.
Do you think Tesla Battery Day will be a bit underwhelming?
National Battery Day
has been circulating with this background for Battery Day.
But I keep coming back to September 22nd. Battery, that's Battery Day.
At Tesla's Battery Investor Day.
What will Elon Musk say September 22nd?
Present. I think it's going to actually blow people's minds. It blows my mind, and I am, I know it.
So September 22nd, as you mentioned, that's Tesla's Battery Day.
I think we'll take it far more seriously when Tesla holds its Battery Day on September 22nd, and that's when you might see the battery that can go for ages without charging. With Elon Musk, who knows?
I think it's going to actually blow people's minds. It blows my mind, and I am, I know it.
Hey, Kevin in Colorado, aka your Tesla pilot, and we are talking about
Tesla.
That's right. Gonna keep it short and sweet today. Just a quick video, some comments, some thoughts on Tesla as we approach Battery Day. I found it was appropriate to film today's video in my Tesla Model 3. This is a 2018, received just before Christmas when the incentives went out. I love this gorgeous white interior of this Model 3 that we purchased back in 2018. I tell you, here we are almost 2 years later, and I have absolutely zero regrets on the purchase of this Tesla Model 3, which means my next vehicle will be a
Tesla.
That's right. And the vehicle after that, I will purchase a
Tesla.
And the next airplane that I plan to purchase will be from
Tesla.
That's right. So all these exciting things happening with Tesla. I know we had vicious three or 4 days down there. We lost 25 to 30% of the stock since the post-stock split. But today we did have a nice little rebound of about 10 to 11% in Tesla stock. And we are only 12 days away from Battery Day. Wow. So it's only going to keep on creeping up, folks, as we get closer. Now, I do have to amend my earlier prediction with the S&P 500 snub that Tesla received. I do not expect the Tesla stock to run up to $700. I think the Tesla S&P 500 inclusion was going to be force the hedge fund managers to buy about $26 million of stock prior to the split. Post-split, that'd be 130 million shares of Tesla that the hedge funds managers will have to buy when S&P 500 comes along. So still happening, still in the future. There is no guarantees. Could it never happen? No. I don't believe that's viable. I think Tesla is just such a huge force in the EV market, in the world market, in the software market, in the technology market, in the global market, that the S&P will be forced to recognize Tesla and their outstanding achievements by this amazing CEO, Elon Musk, who I am stoked to see on Battery Day here in 12 days. Have my plane tickets, have my hotel, I have the golden ticket. I am just so excited. It's going to be epic. It actually snowed in Colorado last night. See picture here. And it's so nice to be able to film this out in the garage. Got the Tesla ass warmer on, keeping me nice and toasty. Hey, next we're going to watch a video from Trading Nation. Really, really quick. Todd does a great job of breaking this down from Asset Wealth Partners. And just kind of talks about some of the highlights of what's coming on with Tesla.
We're going to take a look at Tesla. Obviously, a lot going on in the news cycle with Tesla, post-split, a lot going on in the underlying stock. So let's begin to break it down. In our opinion, the main difference between how bulls and bears view Tesla is whether they view it as a value as a traditional auto company or technology company. If you're trying to assign valuation of Tesla based on the conventional automobile industry, of course the stock's going to look expensive. We don't see Tesla as an auto company, but more as a technology on wheels kind of company. Plus, let's not forget the personal turnaround story of Elon. He had some earlier erratic tweets that put him in hot water. He also got a major credibility bump and a lot of free advertising from a successful SpaceX launch. So Tesla is under pressure specifically today. We've come off post-split, but today as GM took 11% stake in Nikola. But ultimately, I think that's a long-term boost to the new EV industry. And plus, there's a little public spat going on between Bill Gates and Elon in terms of the viability of the long-haul trucking battery. Let's take a look at the chart here and get a view on the technicals, and we'll kind of return to the fundamentals and finish it up here. So if you look at the chart coming from early 2020 at the March low, we actually have a nice uptrend channel here that has begun to offer support around the $355 level. This is also a source with a parallel channel off of these two highs here. So Tesla's really just pulled back, and we might be looking at support here. If this line is broken, not all hope is lost. You do have support down here at about the $280 level as well from a technical point of view. But we hold Tesla. We bought it in March. We sold half of our position in July. We're continuing to hold the other half of our position here in TSLA. So back to the valuations, right? So global sales of passenger cars, they're pretty sluggish in 2019, obviously because of COVID. But the electric sales, car sales generated about 40% year-over-year increase. Okay, so they increased 40% year-over-year. Still, electronic vehicles accounted for about 2.5% of total global car sales and about 1% of global car stock in 2019. So there's a lot of room for growth here. And with continuing technological improvements, cost reduction, you have more choices of cars, you have a maturing infrastructure, and the general society going more towards like a green lifestyle, we expect this general sales trend to continue. So Tesla has come under a lot of pressure for not performing well in Europe, but context is important here. The larger, more expensive, those Model X's and S's, they were never high volume sellers, and they don't really fit the tastes in Europe. Model 3, however, does. It was introduced to the region in the beginning of 2019. The sales of Model 3 jumped to the 4th spot by the end of 2019. Plus, the cars being sold in Europe are produced in Tesla's Fremont factory, and they're being produced, most of them are coming from the US, so there's actually a very short supply of Tesla available for sale in Europe. And only did Tesla start producing cars again in July in Europe. So you can't really talk about Europe with Tesla's market without bringing in China, which is the largest auto market in the world. Currently in 2019, electronic vehicle market share in Tesla has gone up from about 4.5% to 4.7%, even after significant trimming of incentives from July. So there's a strong sort of embrace for electronic vehicles in China, which again is the largest auto market in the world. Tesla remains by far the most popular company there, despite local competition. While we agree that competition in the EV space is rising, we think Tesla is so far ahead in terms of their battery and software technology, kind of going back to our point that Tesla is more like a technology on wheels company. Owners or prospective owners of electronic vehicles have something called range anxiety, so how far the car can go on longer trips. Tesla has both the longest range batteries and the largest charging network infrastructure, with the latter being something that will be hard to replicate for new electronic vehicle market entrants. So they have a major competitive advantage there. So with regards to economies of scale, when it comes to auto production distribution, Tesla itself is on a path of improvement. The auto industry is very capital intensive, and you need sales volume to support the financials of the company. We believe the introduction of the budget Model 3 kind of changed everything from a financial point of view. We think Model Y, embraced in the US and China, will take the company to the next level.